Something just broke in the financial system, and the silence is deafening. While you were watching markets close Friday, while headlines cycled through usual noise, a fracture appeared. Not in the stock market, not in crypto. In the institution that supposedly holds the entire monetary system together, the Federal Reserve, Jerome Powell, chair of the most powerful central bank on earth, the man who controls interest rates, the man who decides when to print and when to tighten. He just came out in a video statement and said something you need to hear. He is under criminal investigation. Let that sink in. The head of the Federal Reserve, criminal investigation by the Department of Justice, and the reason they are giving the official story is about a building renovation project that went over budget, a construction project. That is what they want you to believe. But Powell himself said something different. He said this is not about construction, not about testimony. This is about interest rates, about the independence of the Federal Reserve being attacked because it refuses to lower rates on command. Stop. Look at what just happened to gold, to silver. Gold hit $4,668, new all-time high. Silver surged over 4% in a single session, $83. This was not speculative pump, not retail frenzy. This was institutional panic. The smart money saw the subpoena, saw Powell's response, and understood what it means. The system that has kept the dollar stable for 50 years, the system that separates monetary policy from political whims, that system is under direct assault. And when the foundation cracks, safe haven assets do not wait for confirmation. They move first. Think about mechanics of what is happening. Department of Justice serves grand jury subpoenas to Federal Reserve. They threaten criminal charges against the sitting chair in the middle of his term. This has never happened in the history of the modern Fed. Not under Volcker, not Greenspan, not Bernanke, not Yellen. Why now? Why Powell? Because Powell will not bend. He raised rates aggressively to fight inflation, held them high when the administration wanted cuts. And now that the Fed has started lowering rates, it is doing so cautiously, slowly, based on economic data, not based on political pressure, not based on what the president tweets, not based on what Wall Street demands. And that restraint, that independence is being punished. The official story is Powell lied to Congress about the cost of renovating Federal Reserve headquarters in Washington. The renovation was supposed to cost $1.5 billion. It ballooned to $2.5 billion. Powell testified about this in June. He explained the overruns. He defended the project as necessary infrastructure to modernize decades-old buildings, remove asbestos, upgrade electrical systems. But the administration seized on this, claimed mismanagement, accused Powell of incompetence, and now the Department of Justice, under direct influence of political appointees, opened a criminal probe. Powell responded Sunday night. In a rare video statement, he said the renovation is a pretext. The real issue is that Federal Reserve is setting interest rates based on what will serve the public, not based on what serves the president. He called it intimidation. He said this is about whether the Fed will remain independent or whether monetary policy will be directed by political pressure. This is not normal. This is not bureaucratic squabble. This is constitutional crisis in slow motion. And the market knows it, because when the central bank loses independence, the currency loses credibility. When the currency loses credibility, hard assets become the only rational hedge. Gold, silver, real things that cannot be printed, cannot be manipulated by executive order, cannot be subpoenaed into compliance. Let me walk you through what happened in days following the announcement. The dollar fell. Not a little. It dropped against major currencies. The DXY, the dollar index, weakened despite the fact that usually in crisis, the dollar strengthens. Why did it fall this time? Because the crisis is the dollar itself. The crisis is the institution backing the dollar. Investors looked at the situation and realized that if the Fed can be criminally prosecuted for not obeying the president, then the Fed is no longer independent. And if the Fed is not independent, then the dollar is just another political tool, another currency that gets debased to serve short-term political goals. And that changes everything. Because the reason the dollar is the global reserve currency is not military power. It is trust. It is the belief that the United States will not inflate away its debt, that the Federal Reserve will act in the long-term interest of price stability, even if it causes short-term pain. But if that trust is gone, if the Fed becomes an arm of the White House, then the dollar is no different than the peso, the lira, the bolivar. It becomes a currency that loses value every time the government needs to pay its bills. And in that world, gold does not go to 5,000. It goes to 10,000. Silver does not go to 100. It goes to 300. The timing is everything. Powell's term as Fed chair ends in May, just a few months away. The administration is preparing to name a replacement, and the nominee widely expected is someone who supports much lower interest rates, someone who has publicly argued that the Fed should be more responsive to the executive branch, someone who believes the central bank should prioritize growth over inflation control, If that nominee is confirmed, and if the new chair follows that philosophy, then the monetary policy of the United States changes fundamentally. The Fed put, the safety net that investors have relied on for decades, will no longer be under the stock market. It will be under the president's approval rating. It will be under the political party in power. It will be weaponized. And when that happens, every foreign central bank, every sovereign wealth fund, every pension manager will have to ask the same question. Do I trust the dollar? Do I trust that my treasury holdings will hold value in 5 years? Or do I need to diversify into something that cannot be controlled by Washington? That question is already being asked, quietly, behind closed doors, and the answer is showing up in the price of gold, in the price of silver, in the flow of capital out of bonds and into hard assets. Look at what happened last week. The Federal Reserve released data on overnight repo operations. Repo is where banks borrow cash overnight using treasury bonds as collateral. It is emergency liquidity. Healthy banks do not use it. Banks use it when desperate for cash. When they cannot get funding anywhere else. Friday morning after Powell's statement, the repo facility saw $17 billion in activity. That is not normal. That is panic. Banks scrambling for liquidity because they see what is coming. They see erosion of Fed independence. They see potential political control of monetary policy. They are preparing for instability. 17 billion might sound small, but in repo markets, it is a signal. The canary in the coal mine. Repo borrowing spikes when confidence breaks down, when banks do not trust each other, when interbank lending freezes. We saw this in 2008. We saw it September 2019, right before the Fed restarted quantitative easing. And we are seeing it now, because the subpoena of Powell is not just an attack on one man, it is an attack on system credibility. And the system is responding with fear. Let me explain why this matters for gold and silver specifically. The traditional view is precious metals rise when inflation rises. That makes sense. If the dollar loses purchasing power, you need more dollars to buy the same ounce of gold. But what we are seeing is different. Not inflation-driven, not yet. Confidence-driven. Gold and silver are moving because investors no longer believe the Federal Reserve can fight inflation independently. If the Fed is pressured to keep rates low, forced to prioritize short-term growth over long-term stability, then inflation will return. The 2% target will be abandoned. The currency will be debased slowly, steadily, until the nominal price of everything explodes. The smart money is pricing this in now. They are not waiting for CPI to spike, not waiting for the Fed to officially capitulate. They are buying gold at 4,600, buying silver at 83, because they understand that once capitulation happens, once the Fed starts cutting rates aggressively under political pressure, it will be too late. The price will already be at 6,000, at 150. And there is another layer, a geopolitical layer. The rest of the world is watching. China is watching. Russia is watching. The BRICS nations are watching. They see the United States attacking its own central bank. They see the dollar being politicized. And they are accelerating plans to move away from dollar dependence. China has been stockpiling gold for years. Central bank purchases at record highs. Russia converted massive portions of reserves into gold before Ukraine conflict. India is buying. The Middle East is buying. All preparing for a world where the dollar is not the dominant reserve currency. And silver is caught in the middle. Because silver is not just monetary metal, it is industrial. It goes into solar panels, batteries, electronics. China controls 60 to 70% of refined silver supply. And starting January 1st, days ago, China implemented export restrictions on silver. This is not coincidence. This is strategic. China sees instability in the United States, sees the Fed under attack, and it is using leverage over critical materials to tighten the screws. If the West wants silver, it will pay China's price. It will negotiate. It will concede. The price signal is already here. Silver in Shanghai trading at massive premium to New York. $89 in Shanghai, $75 in New York. That $14 gap should not exist. Arbitrage should close it instantly. But the gap is widening because the metal is not flowing. The physical bridge between East and West is broken. Western buyers are looking at inventory, looking at export restrictions, looking at the Fed under investigation, and realizing supply chains they took for granted are not reliable. So they are buying now, paying premiums, taking delivery. This is what confidence crisis looks like in commodity markets. It does not announce itself with press releases. It shows up in spreads, in premiums, in the inability to get metal at quoted price. Let me tell you what happens next. The Senate will hold hearings. They will grill Powell about the renovation. They will accuse him of mismanagement, and Powell will defend himself. He will explain the Fed followed procedures, that cost overruns were due to unforeseen issues in 80-year-old buildings. But it will not matter, because this is not about facts. This is about creating a narrative that Powell is incompetent, corrupt, a bad manager. So when the administration replaces him in May, the public will accept it. And the new leadership will lower rates, print money, prioritize the stock market over the currency. And the cycle begins again. The cycle that always ends the same way. With inflation, with currency devaluation, with flight to hard assets. The difference this time is speed. In the past, these cycles took years. The erosion of central bank independence was gradual, subtle. But now it is happening in real time. Subpoena served Friday, Powell responded Sunday. Gold hit new highs Monday. The market is not waiting. And this repricing has only just begun. Most people do not understand what is happening. Most saw the headline about Powell and thought it was political noise, a distraction. They did not connect it to gold, to the dollar, to systemic implications. But big money saw it, sovereign wealth funds saw it, central banks saw it, and they are moving, reallocating, reducing dollar exposure, increasing gold, buying silver as strategic hedge. This is the beginning of regime change. Not government regime, monetary regime, the regime where the dollar was trusted because the Fed was independent. That regime is ending. The regime that comes next, where the dollar is a political instrument, requires different strategy, different portfolio, different understanding of risk. If you are holding dollars, holding bonds, you're holding assets backed by a central bank under criminal investigation, a central bank that might be controlled by the White House in 4 months, a central bank that might be forced to print to finance deficits, support stock prices, avoid recession at any cost. Is that a risk you want to take? Or do you want to hold assets that do not depend on the credibility of any government? Assets that have held value for 5,000 years, regardless of which empire was in power. Gold is not rising because of charts. Silver is not rising because of technicals. They are rising because the foundation of the global monetary system is cracking. The Powell investigation is not a scandal. It is a signal. The rules are changing. The independence of institutions can no longer be assumed. The political pressure on the monetary system is now overt, and the market is responding. 4,668 for gold, 83 for silver, new highs, in the middle of low unemployment, in the middle of a bull market. Why? Because the smart money knows the bill is coming due. The bill for decades of deficits, for quantitative easing, for rates kept too low for too long. And the only way to pay that bill without defaulting is to inflate, to devalue, to make the debt disappear in nominal terms while destroying purchasing power. Powell was trying to prevent that. He was maintaining credibility, keeping inflation controlled even if it meant slower growth. But now that restraint is being attacked. That independence is being criminalized. And when the restraint is gone, when the new chair is in place, when the political pressure to print becomes irresistible, gold will not be 4,000. It will be 6,000, 10,000. Silver will not be 83. It will be 150, 300. Not because of supply and demand, because of monetary regime change. Because the currency that prices these metals is losing credibility in real time. This is not prediction. This is math. If the Fed loses independence, the dollar loses trust. If the dollar loses trust, hard assets reprice. The only question is speed. Based on this week, based on the move in gold and silver, based on the 17 billion repo spike, the repricing is already underway. The silence in mainstream media is intentional. They do not want to explain what the Powell investigation means, because explaining it would require admitting the system is fragile, that the dollar is vulnerable, that Fed independence was the only thing preventing currency crisis. But you do not need media to tell you what is happening. You can see it in the price, in the premium. Physical silver trading $14 higher in Shanghai than New York. Gold hitting new highs while stocks barely moved. The decoupling is happening. The monetary metals are breaking free from the paper market, moving based on physical reality of supply and confidence, not futures, not ETFs, based on the fundamental question of whether you trust the issuer of the currency. Right now, the issuer of the currency is under criminal investigation for refusing to obey political pressure. That is the headline. That is the fracture.